Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 28th of January, 2016, and Friday, the 29th, wrapping up the month. As usual, we don't do market previews usually from Thursday to Friday. We'll wrap it up here for both those days, as Fridays are usually just the culmination of everything we've been looking at all week. I will say, this week we knew coming in some issues Monday because of the storm and people digging out. Two-day Fed meeting, we just got through that today. We're in the middle of core earnings season, got a lot of stocks reporting still, including obviously Apple yesterday, Facebook, Amazon. So we're still got a lot of that, and that's a different environment. It's a little bit gappy. A lot of people that are pros kind of sit out that environment. But generally speaking, the big news is still ahead this week. So Thursday is a wide open trading day as we wrap up earnings season. We do have some minor economic data coming out for Thursday itself, including initial and continuing jobless claims, that's the weekly number, durable orders, pending home sales, and natty gas. But the big deal will be Friday morning, the first look at Q4 gross domestic product, what we call the advanced look, the employment cost index, Chicago PMI, and Michigan sentiment. So there's just enough there to sort of maybe move the market early. Keep in mind that Friday is the last day of January, so we have month-ending statements printing, window dressing going on. That tends to be a little dull unless that GDP number misses by a lot or beats by a lot. So I think Thursday is maybe the more interesting chance for some movement because we're past the Fed and we're past most of these earnings. So we'll keep an eye on that and see what going to happen. All right, here's a look at the ES front month futures contract daily chart. Again, nothing really this week. No progress made in any direction. Nothing new to really discuss there. Crude oil closed at 32.15. Gold was up $4.60. That's a 2-month high for gold. All told, the S&P lost 20.68. NASDAQ 100 down 104, about 105 points. Again, Apple being a big piece of that when it's down even 6 points on that $100 stock. It's just so heavily weighted in the indices. SOX down 7. Biotech's down 93.67. Now, here's the scary part. I talked about this. As go banks and biotechs. So goes the market. You've got this inverted cup. We broke down. We came back up to retest the last few days that low from September. Now we're rolling again. New lows on biotechs along with bad-looking charts on Apple that you'll see in a minute. Does not bode well for the market. VIX was only up 61 cents in all this. Again, a lot of today didn't feel as negative as we've seen because a lot of it was Apple, but this could still get worse. Trend closed at 0.74. That puts the 10-day moving average at 1.13. NASDAQ volume was a little bit better than the 2 days when everybody was digging out. The storm there at 1.9. The advanced decline ratio on the NASDAQ, negative 1,249, means 1,249 more stocks down than up. On the New York, it's negative 746, which isn't too bad. All right, we had Google down 16.21. That's a little disappointing, obviously, to see. Apple, we knew because of the earnings, and this is just an ugly chart. That is an inverted cup and handle formation, the new low under 92, so it's going to be ugly on Apple. Amazon down 17.9 on regular trading today. Remember, we've got earnings there. Netflix down 6.68. So they're selling everything off. Netflix was one of our picks under off the daily report under 93.55. That worked out. Put call ratio closed at 0.896. All right, so take a look at the intraday action here. 5-minute candles. Again, the ES, very small gap down. Tried to cover it, couldn't fill it right away. Went lower, then came back up. Moved to new highs for the last couple of days over lunch. Was just sitting there. That spike tail bar candle that you see, that's when the Fed came out. Initially, we went both ways. Then we headed lower. Then we really kind of settled into the downside and flattened out for the last hour or so. NASDAQ side did not fill the gap. Gap down, headed lower initially. Curled back up over lunch, but still couldn't quite fill the gap, and then rolled over. Same deal after the Fed obviously sold off. All right, so what does that leave for the rest of the week? Again, just like what we talked about, we are worried about. No, we're not worried. We're going to be focused on economic data in the sense of the GDP number. Also, whichever earnings are left for the rest of the week here would be important as well. And then that's about it. Tomorrow's Amazon after the bell. I got to be aware of that one. And I believe Microsoft. Yeah, Microsoft as well. So. Those are the two big ones that are left. Charts as usual brought to you by eSignal. We'll be in the lab trying to help you make some money as we get through this kind of strange week. And probably not as eventful as the last couple weeks have been, but it's all right. still had a decent one. If you have not taken a trial of our services, feel free to do so. Amgen also reporting tomorrow. Have a great trading Thursday and Friday. We will talk to you over the weekend.